Good evening, everybody. Hope you're having a great weekend. Let's get into our weekly prep. I'm doing this a little bit early, normally on Sundays, but it will be all available for you tomorrow when you wake up. So, diving into the week last week, obviously, very volatile week. We had a big sell off in the overall market as the market finally kind of released to the downside. Now, I think something important here is to look at the weekly. When you take a look at the weekly, you can see a little bit more clearly how pops have been sold overall on the week, and we are now finally, seeing continuation to the downside. So the overall market is now off the highs about 7%. So we're, on our way to a bigger correction if this continues. Now, there's already been some chatter, as there has been, about the Middle East in terms of headlines and potential easing the aggression there. And then it's been kind of a daily and during the week almost hourly kind of back and forth of hearing a couple different things. So I think what's really a way to simplify and summarize what we're seeing in the price is that the market's just kind of like, we were uh, discounting things for a bit, and we were, showing the market was showing really incredible resiliency for a while, and then it's kind of gave up on that is the way that I kind of see it. Right? Is there's the confidence is not there that this is just going to be resolved until something changes. Now, if something changes, which can happen on a dime, as we know with this administration back in April with the tariff bounce that we know what's possible here. So we want to continue to keep an open mind for sure. But the markets are saying, hey, listen, they're kind of testing the administration's hand here a little bit, I think, because we were showing really, honestly, incredible resilience while oil is flying, commodities were turning back higher, um, and the market was really holding on quite well for a while. And then now it's just finally kind of like, okay, enough's enough. We don't believe you, sort of thing. And so we'll see. The proof will be in the pudding on whether or not tensions ease or they just continue. So that was really more of a matter of time than anything else. The thing to remember here in this type of environment is normally we have gotten a lot of two-way action, but we're now starting to release to the downside and get some follow through. So the VIX is elevated. We closed it around 2677. OPEX was on Friday. Um, we did spike up to close to 30, and really 30 is a big gauge for me. That's a pretty significant level. When you get over 25, the range from 20 to 25 to 30 is typically pretty tough to trade. 20 to 25 is usually pretty good, mainly due to the premiums and the way that they trade. And once you start getting over 30 is when you really get into this kind of corrective mode for the overall market. And so that's really the risk here as we go into the week ahead on whether or not we see some kind of easing or not. And if not, you can expect this volatility to continue. So the weekend market's already kind of suggesting a gap down. Again, this is, you have to take with a grain of salt. We could get headlines. We'll probably get headlines, as a matter of fact, tomorrow. So um, as we look at the economic calendar and earnings ahead, that's pretty much it on S&P. I'm not and really not much else to say. We're below the 200-day. This is, nothing good happens usually for the upside below the 200-day unless you have a significant catalyst. So it's really a day-by-day type of environment, and very good. Has been good for scalpers, and we finally did get more of a trend day, a little bit more signs that the market can actually give us a couple trend days to the downside. If you're on the right side of it, it can be really good. Um, as for earnings and economic calendar, some PMI data on Tuesday, oil inventories Wednesday, and jobless claims on Thursday. So a little bit of a lighter week. Now FOMC is out of the way. Um, we have a couple things to look forward to, but not a super heavy economic calendar ahead. It's mostly going to be the headlines that develop out of the Middle East. As far as earnings go, we have really not a whole lot as well there. We're kind of through a lot of the major ones. Chewy could be interesting. Beyond's been a little bit interesting over past earnings. And then CCL, possibly something on Friday. But really nothing a whole lot to look at. As for the watch list and trade ideas for the week, there's a number of good looking setups. So as far as S&P is concerned, while we're on it, Just watch the 6480. We very likely gap around. So, you can only prepare so much, but just an idea anyhow. If we fail below or are below this 6480, look for continuation and downside. And then a foot back above 6556 could be a magnet move here back to 6600 and potentially another 200-day test. Apple. Apple, a little bit of relative strength on Friday. Again, it's always a little bit tricky going into a new week following OPEX. So just for what it's worth, a lot of times you'll see the opposite moves that you saw on Friday. But, just calling out what we're seeing here, Apple does have some nice relative strength on Friday, and it's trying to bottom. So you had a bit of a trap at this 247, and then it did perfectly test this 249.50 area, and it's tightening up here, as you can see. I'm just going to draw this here. We're getting a bit of a downward consolidation that oftentimes will pop through and lead to a really nice bounce trade. So 252 would be a target in that case if we see the market bounce. AMD is also a very interesting one for upside. So we've got a mix of upside and downside candidates this week. AMD in particular held up a little bit better than a lot of the other names. So NVIDIA, very weak, we'll talk about. SMCI and MU finally sold. But AMD is holding up quite nicely. It's a pretty nasty bigger picture overall, but it's tightening up in this wedge and had a really nice engulfing candle on Thursday, OPEX on Friday, a bit of an inside day, not technically, but very close inside day, that type of action nonetheless. If we can break out of this, I think we're on our way toward 216, big picture, 209.21 first. Circle. Circle has just been, a really good mover for us. We've caught some really nice trades. The 90 EMA has caught up to this one a bit, and we have another consecutive, or 3 days of consecutive price action that have been more digestive and a bit of a breath for the stock. You saw what happened last time. We got 3 days of consolidation after a big run. This is basically just making very big moves, taking a rest, and then continuing higher as a lot of the tailwinds are still remaining a big positive for this, and big players are kind of piling in. So, until this slope changes, we can expect to see much of the same or a catalyst, right? If this starts to break lower, then it's just going to reset it and take longer for the next trade to set up. But for now, the upside is still in play, and a break above this 132 area sets us up for a move back, up to this 141, 147. Really call it 150 would be the next target for Circle. NBIS, very in play name, as we know. Pretty much a triple catalyst. I think I mentioned double catalyst in my note, but you had the $2 billion investment, $27 billion investment, and then they issued warrants. So a little bit of dilution that hit the tape after this big 35% move in 4 sessions. So really, it's actually shaken that off quite well. We back tested the 9 EMA and even put in a trap at that 114. So it's shaken off that news pretty nicely. The thing that is important here is for trading, the range has been very good. So it's giving us a very good range. And this 114 to 124 is the range that it's stuck in. So once it breaks out of that, we should expect to see some momentum pick up in either direction. I like that it tagged the 9 EMA and had a pretty good close on Friday. So the first watch will be the upside. Excuse me. The next one, NVIDIA. So NVIDIA's been obviously a very difficult name to trade. The weekly does paint a little bit clearer picture of what's going on. So you just have this big, symmetrical triangle setting up, or wedge, or whatever you want to call it, and it did break on Friday. So you had a bit of a break here underneath. Could be a very big bounce spot if the market reverses on headlines, just because this has been stuck in consolidation really since the summer. It's not really made much of a move. It had one all-time high breakout. Aside from that, though, this has been a pretty brutal name to try and trade or look at. But it is breaking this bigger consolidation to the downside. So we can reasonably expect to see a bigger move in this setup. The first pick would be continuation lower, because that's the direction of the trend right now and what has broken. But if we get a catalyst and it traps that can often lead to that reversal that actually sticks and can lead to a new uptrend. SMCI obviously had negative news, down over 30% on the headline on Friday with the indictment. Um, this was an A grade trade for me. This was a frustrating one. I got stopped out on this pop off the open, and then end up playing out beautifully in the latter half of the day. It's tough. This name in particular likes to do that. I think that's mostly why I was frustrated, because a lot of other names wouldn't actually act like this. But this name has a history of being a bit trappy. Nonetheless, really, really weak day and close on the lows. So that sets up a pretty simple day two continuation trade under 2053. Next, USO. So last one here. USO, again, headlines already kind of swirling around over the weekend. We'll likely get much more tomorrow as well. Really, just the main thing is just keeping an eye on it and being ready in either direction. So if we get any kind of positive developments, that could set up a really nice reversion trade on USO. And if not, if things just continue lower for equities and nothing seems to be changing in the way of the timeline of the conflict in the Middle East, we could reasonably expect a squeeze to set up. We've had essentially 6 or 7 sessions now basing sideways just below the highs. And if that ends up playing out, we could get a really nice move. This one is a little bit harder to trade intraday. As you can see, it's a bit messy. But like silver and like gold, there are days like even USO here on the 9th. There are some pretty significant moves if you're in it on the right days. So we want to watch it. Moral of the story. All right, guys, that's what I got for you this week. If you have any questions, as always, let me know. For anyone that's new or in the open house for this week, this is how we structure our prep for the week. And like I said, if you have questions, just drop them in the chat or any chart requests. We'll be sure to get to that. Otherwise, let's have a fantastic week and enjoy your Sunday.